the first is the building blocks of capital markets. What we have started to do now is just to get the regulation right. Markets flourish on better regulation, because better regulation brings some level of confidence in the market. They bring some level of trust, because that is what capital markets is all about. You are taking people's money, so people need to feel safe that their money is in the right hands, and they will get the return that they actually been promised. And therefore, I think what we are working hard to do now is to set up a very solid, world-class regulatory framework, which can make the Rwanda capital markets very, very, very competitive. You realize some other markets, some developed as they are, you have cases where investors' money disappear. I wouldn't mention a name, but one of those markets that you mentioned as big, investors' money disappear. We don't want such things here. That's why we have a very strong, or we are developing a very strong regulatory framework, investor protection mechanisms, and also to just deal with the efficiency of the capital markets generally. Ensure that the players that you have in the market and the entities that you have in the market are of a certain standard, and you can ensure that by looking at the regulation side, and also looking at the supervision side, and also just to start off by looking at the licensing side. You need to license the correct entities that are coming into the market, so that when people take out their money to give out to these entities in form of investment, they are sure that there are proper corporate governance in place, which act as a protection to investors. There are also mechanisms in place for recourse. And also, one thing that we are also building on is the infrastructure. In other countries, like in Kenya and others, a lot of investments, you can just do them via a phone. But one thing that impressed me about these countries, the level of the mobile money is highly advanced. I mean, like, it's far much advanced, like more than the whole of Southern Africa. There we still use coins and notes. I mean, here, I stayed here for the first 4 months. I've never actually seen the Rwandan francs notes with my eyes. And
you heard about them.
Yeah, I only heard about them. And I was...
You need awareness, the color and texture.
Yeah.
They actually have new notes.
They have new notes.
Yeah. I hope you don't get confused along
We are still looking for the old ones when the new ones on the market.
Probably the ones that I've seen are the only new notes. But I've never handled cash.
Yes.
So and even people on the streets, the guys on the motorbikes and the what, it's just money. It's just I don't want to say more money, but it's just some digital type of money, which is very impressive. And therefore, as we are building the capital market, those are some of the competitive and comparative advantages that we look at, so that we just plug our systems in, and then investment can be easier.
I wanted to bring you to a point, because I am a fan of the capital markets.
Yeah.
And for so many years, when I've had conversations and engagement between your office and just to learn of what's going on, I've had this conversation, which is regulatory, and building. Isaac here is a fanatic of financial education. I don't know what comes first, regulatory, then education. I don't know where we are at right now as capital market, because there's been so many initiatives like the University Challenge, which you hold, I think, every year. But don't you think that the building has taken forever?
It has.
It's really taken forever.
Yes. It has.
Why is that?
Yeah, I think probably it's a number of things, maybe priorities also. But that's also the reason why I was brought in to sort of knee-jerk the growth. But I very much agree with you. A lot of people here don't know about the capital
Yeah.
markets. We only have about 20,000 CSD accounts in a population of 14 million, 14 million people. Botswana's population total is about 2 million. We have more than 100,000 accounts. So by standard, in terms of developing markets, we need to be at about 5% of the population. That's the general standard. But we are far much below that. And also education plays a very important role. I mean, that's one of the big priorities that I think is my task, to really educate the market. And they will tell you, even I came in May, and first month, I think the University Challenge was there. This year we're going to be changing it. We're going to be changing the format, because you can't only be calling these people to Kigali to meet once. We need to go out there to the other towns to make presence. But education, I think, have not been done enough in a lot of sectors in the capital markets here. And I think we have a lot of support from other entities. If you could have realized, we have started some monthly webinars where we have a very good attendance on various topics that we need to do in the next coming financial year, because of course you have to fund education also. In the next financial year, I think if we get the right budget, we're going to have some massive education campaigns across radio, across television, and across a variety of things. Because I mean, we have planned some significant amount of money to be channeled up towards that. Because otherwise, if you don't fund it, you will not get anything. But I fully agree with you. I think in terms of outreach activities, in terms of education, we have been lacking for in that aspect. But I think in the next few months, starting today, you can see
It's part of sensitization.
You can see good things are going to come, and we're looking forward to partnering with also radios like yourself.
Great. Isaac, I'd like here for you to jump in from what you have observed and where he is when he talks about that investment in educating the masses. 20,000 really CSD accounts is quite on the low.
It's unfortunate. I think I very much agree with the sentiment that there is a need to build up frameworks so that people can feel confident that the Rwandan people, even beyond Rwanda, because Rwanda has become a destination for finance. While the frameworks are critically important, that people can feel confident when they bring their money, when they farm with the CMA, they will harvest. And they will harvest relative to what they were expecting when they started planting their money. And we've talked about this on the show many, many times. But if we don't understand as a public, if we don't have this push to understand that, you can plant your money. It's not just for eating. I think last week on the show we were talking about how everyone rushes to real estate. When we want to find where to put our money, let's go buy a plot of land. But there's more that the economy needs. There's more opportunity to grow our money than just in property. And there's some access to your cash. There's some benefits that you can get when you invest in growing business and bringing capital for companies to raise funds and make profit. So I think that parallel run of regulatory framework to make Rwandans and the public in general more confident in planting money within the capital markets, but also understanding where the benefits are. Please, let's know that there are things that you can do here, and you can do well. You can plan for retirement. You can plan for emergencies. You can plan for putting your kids in school. You can support our economy through the capital market. So this education is critically important. I'm happy to hear it.
We have the CEO from Capital Market Authority, and he's here with us for this conversation. I know Juliana has burning questions, but before I bring in Juliana, Mr. CEO, we have a big problem, which is the problem of liquidity. I know you want to make the market exciting.
Yeah.
But I wish someone is waking up every day to tell us where to go and find what to invest in the capital market. All right. So liquidity remains a major concern for many African stock exchanges, including Rwandans. Some critics argue that without significant trading volume, the market is more symbolic than functional. How would you respond to such concerns?
Yeah, it's actually a true concern. I mean, much as you want to bring more people into the market, you need instruments that the people are going to invest in, and that is why we have started to showcase even some of the listed entities. I mean, I went to, is it Basagera? Buzera, where Maui millers are located, physically to see what they're doing, to showcase them to some of the entities, to say, listing or raising money in the market can actually help you to expand capacity to buy new machinery, and therefore, as a medium-sized company, you can emulate the likes of Maui and then come to the market to raise capital. We're working hand in hand with Rwanda Stock Exchange to format and expand their business clinic, where small and medium-sized companies actually see an opportunity to come to the market to raise capital. That is on the equity side, also on the bond side. I've personally traveled to, I think it's halfway to Kisenyi, Msanze, I think, yes, where we witnessed the raised money to run a power station, a hydropower. They were raising US dollars and Rwandan francs. And we have adopted a hands-on approach to companies to assist them, to help them in the process to raise capital. By so doing, also showcasing some of the potential companies that might be in need of raising capital to come in there. And one other thing that we are doing is, we worked with Rwanda Stock Exchange to formulate and approve some of their rules, to bring in new instruments like exchange traded funds, like real investment trusts. Like you're saying, we had a very successful webinar on real investment trust, which I think is a good opportunity for people here, especially given the massive developments that I see here. So we are right on the ground working on that. But of course, also there are discussions with government for government to also divest in some of the entities, either through letting Akachiro to list some of the entities that they have invested in, because they're just a development fund, but then they need to exit at some point. So in terms of exiting, they can do that through the market. So these discussions are going on very well, fine. But listing process and getting instruments is not a child play. It takes a lot of time because you need to get a lot of things in place, and that is why one of the things that we issued late last year is the guidance for corporate governance, so that when entities want to really come to the market, they need to look at the way they are structured, they need to look at their past performance, they need to document their existence, and then they can decide now to get into the listing journey.
Juliana.
Interesting, Mr. CEO. There's been a talk of Rwanda positioning itself as a financial hub, but global investors often cite regularity concerns and market depth and barriers. What are you doing to change this narrative and make Rwanda a true financial powerhouse? Yeah,
I can tell you for the 8 months that I've been here, we have changed a lot of regulations. We changed the CSD law. It's going to Parliament very soon. And simultaneously, we have formulated, which is also going to be going to Parliament, the virtual assets law. We have revamped the CIS regulations. We are looking at the new capital markets law. You are changing all these laws because you want to number one, open up the market and become very competitive, and then number two, you also want it to allow for new instruments to come to the market. So when you do that, you are broadening and diversifying the depth and breadth of the market, because if you have more players coming in, you are now able to have a lot of activity, even in terms of the funds. The new shares, collective investment undertaking laws, will allow us to license and regulate variety of funds. And when you get the regulation right in that respect, then you get into the business development side of attracting companies into the market and also attracting investors into the market. And therefore you are able to get a proper mix, and you'll be able to see activity in the market. But on the regulation side, the regulatory barriers, I think we are doing extremely very well. And in fact, even in terms of efficiency of dealing with people who come to set up here, I think as CMA, we have tremendously improved the speed at which we deal with applications, because a lot of guys, when they come in the market, they don't want to be waiting for months with back and forth. They just want to clear rules, come into the market, give them efficient feedback, and then so that they go on. And as I speak now, we have a lot of applications that are coming up. We have given feedback to some of them, and majority of them will be coming into the market.
You speak about players, and I think this intrigues my interest in understanding if the appetite is still as much as in the earlier years when the capital market introductory stages were on, and we saw the likes of Blairo jumping on board, Bank of Kigali jumping on board. Do we see companies who say, we want to appear prudent to investors, and we want to go to the capital markets? Is the appetite as much? And also from the investors who demand of, we want to partake of such and such a company, why aren't they coming through to the capital markets?
Yeah, I think the appetite is there, really. I mean, we have had a lot of interactions with a lot of entities here who I can't name, obviously. And I think, the response in terms of them wanting to come to the market, I think it's there. Even in terms of the investors here in Rwanda, investors in diaspora, and also investors as in foreign investors who want to come to the market. And one of the things that we are also doing is that we are also building the conduit in terms of, if you are a foreign investor coming into the market, especially large institutional investors, they need a mechanism to invest in here. So the mechanism have been very weak. They needed to go through Kenya before they come to Rwanda. So one of the things that we're actually doing, we're actually working with about 3 of the commercial banks here, domestic in Rwanda, to build up a custody business, because we need a very strong custodial services to offer to mainly foreign investors. There are 3 banks that we have been working with since late last year, and I think they're making some very significant process in setting up an independent custody service to service some of the foreign investors. Because look, it's called a market, and it's called a market because there are different types of investors. There are retail investors, there are institutional investors from here, there are retail investors from outside, there are institutional investors from outside, there are diasporas, there are people from here in terms of the region. So when they come together, that's when they make the market. So when you have this type of market, is actually fine. And one of the things that we are also doing as CMA is to do some 1 or 2 international road shows, just like other markets do. Go to New York, to London, to say, we are Rwanda capital markets. We have got unit trust. We have got we've got entities that are doing there. So we've been working with the Embassy of Rwanda in Washington and in New York to arrange for such investor road shows. And also we're going to be doing the same in London as part and parcel of our sort of multifaceted growing of the market. But in terms of the investors to come into the market, I think they're there. I mean, I can tell you, I receive thousands of inboxes even my LinkedIn on people from Rwanda, the Rwandese in diaspora, about they want to put their money in here. And like he rightly said, a lot of people actually look up to property, and that is why we speeded up the rules and regulations for listing of the REITs, and because it's a simpler type of mechanism.
Interesting, Isaac.
There's one thing that I hear often in the work that we've done over the years in terms of financial education, and that's investors' appetite for not even investors' appetite. There's a lot of push in Rwanda to position ourselves from government level as a financial destination, the Singapore, if you will, of Africa. And it's also Rwanda Finance and, of course, the work that you do at CMA, RSC. There's a lot of attraction of funds coming into the country. This is a great destination to reach into the region. There's a lot of messaging around that. SMEs that we work with, that I've done work with over the years, who are looking to raise capital, still have some, again, this is the education element. They still have some foreign concept of what it means to raise funds, that, if I need to raise funds for my business, let me go to the bank. We still don't consider the capital markets as a destination for SMEs. Now, of course, there's some realities on what a growing business needs to be able to do to qualify to be listed. But one concern is exiting that we've seen from investors. And expectations on SMEs that are growing on how to exit. In your experience working in this space, what should our SMEs be looking for? What should our investors be looking for so that they can communicate better with one another in the expectation of what happens when somebody says, I want to come and invest in a Rwandan business from outside the country, and I want to invest 100,000 USD, and in 5 years, I want to divest 5x, 10x. Can you give us a little bit of your experience? What does it look like realistically in our context?
Yeah, the building the ecosystem of the capital market is also very important.
Yeah.
You need to, even before you build the actual companies to get to the stock exchange, you need to build some efficient funding mechanisms in the economy.
Yes, right.
Like right now, you need to know or build angel investors in the economy. You need to build private equity presence in the economy. You need to build venture capital into the economy, because those people are the ones that provide some first level type of funding before they actually even get to the exchange. And also, still in building this ecosystem, you also need to build the intermediaries around it. You don't want some small entities to be trying to raise capital, and the costs are prohibitive. Not even the cost of the stock exchange itself, but the cost of raising capital, engaging a lawyer, engaging accountants, and engaging that. So you just need to see that you have got enough ecosystem in terms of the market intermediaries to build that. But also, most importantly, they need to be some of the structures that support various type of levels of companies. Number one, you can get a fund that get listed, and then this fund support SMEs that have got the potential to grow, and not necessarily having each and every SME looking to list.
Yeah.
So you have that structure as a vehicle, which is going to be listed to raise capital, and then this capital is actually deployed among the SMEs. But most importantly, also, we have this at Rwanda Stock Exchange. They have an investment clinic.
Yeah.
It takes time to build those SMEs, but ultimately, I think there'll be success in terms of how they know how they can raise capital. Because when you get them through the clinic, they might even realize that we're not yet ready for the stock exchange. Yeah. But I think the option that we have is to go for for venture capital, or not for venture capital, or for do like Maui will go for debt in instrument to raise debt and then get into the market. And after you raise debt in the market, you can simply now list the company and convert that to equity. So we don't have a lot of presence of private equity in the country now, and there's not enough venture capital also in the country, and therefore it's some of the law base that needs to be developed before you can actually get to even get companies to list. But of course, the conversation with government is government also need to divest in some of the countries as a means to let the private sector to thrive. The government can't run everything, government need to see channels that some of the things that they have, they divest in them and then let the private sector run with that. And I'm happy that, here the government is so much willing to go that route, and we've been so busy with government in a number of things that we are discussing, including even property that the government sometimes owns. So I think it's actually in the going into the correct space.
Is the story of Simera part of those conversations?
Is what?
The story of Simera as a plant.
Yes.
Was it part of the conversations for government to divest away from being actively involved?
Yeah, and not only that, but not only Simera, and a lot of other companies that are actually government holdings, and also even some companies that are private. I mean, there are a lot of very big private entities here in Rwanda that we have had the conversations with. You go to the shops, they produce a lot of stuff, and we just want to give them efficiency in terms of maybe divest some of the equity and then run with other things.
When you mentioned you have the equation of number of accounts in the capital market, not many, which makes the Rwandan market quite very small. When you were taking on the responsibility, you said you saw an opportunity. And then there's so much to fix in the baseline to get the market to set off. What is exactly keeping you awake? Because when I hear your story, it looks like too much work in the back end is going on.
Yeah, it's too much work. Actually, too much. I don't know what is more than too much.
How do you describe more than too much?
Yes, I don't know what is more than too much. We have worked very hard in the past 8 months. I think I've never worked this hard in my life.
You have to put in the work,
which is why you chose Rwanda.
Thank you for your service.
Task.
Thank you because we need it.
In order to get a lot of things into place, and that is why I was saying to Manifik when I came, I've never been to this part of town.
Oh, you haven't?
No, never.
We're glad we brought you this side.
I've never been to this part of that because I spent a lot of time doing a lot of work, and like I said, even the visibility of the capital market itself. Before you can actually do anything, that education, that going to come. People just need to know that you exist.
Awareness
is very key.
Your brand.
I mean, I went to Maui Millers, and the CEO they just said, you know what, in our existence we have never had the CEO or capital markets visiting us at all. I mean, and this is how you actually build social capital, as you were saying in radio. I listened to your radio. I listened to it.
Yeah, he told me he listens to that show.
Yeah. No, always I listen to this radio. I haven't learned King Oranda yet. So you see, that's the reason why we're building the market. But I will say we're sort of on the right track. so far, and things are looking good, and we're seeing a lot of interest from various entities. So we should be good.
Let's look at what's happening today. Of course, there's stories of sanctions, where the global markets are. There's global economic uncertainty. There's war, which is still ongoing. Russia, there is the trade wars, the US, Canada, China, and everyone. With whatever is going on, the impact of the geopolitical shifts, how insulated is Rwanda's capital market from these kind of external shocks? And what could be your strategy to ensure long-term resiliency?
Yeah, I think for now I'll say the resilience comes in the fact that the capital market is not yet connected to the outside world. Yeah, and therefore sometimes whatever happens outside doesn't directly at a faster speed affect the market. But in the medium term, it will, because when those things happens, Rwanda being an import economy with some of it imports some majority of the things, I think fuel and stuff like that. Those things will come in at a cost, and then the cost of living will just generally go up. And then when the cost of living go up, it means the listed entities will not make a lot of money as much as they could. And if they don't, then they won't give as good return as they are supposed to be to the investors. So that's the general effect of some of the geopolitical things. But the good thing is that I think there's a deliberate effort from government to really diversify the economy, to make the economy much more efficient. You can see here, I've realized there's a strong even activity into the MICE sector, the meetings and conferences. I think it's Rwanda is doing very well in that as a sector of the economy. The services sector, a lot of people prefer to set up business here because there's a lot of change of business friendly regulations, which is what people really want. People don't want to be staying for a long time trying to deal with applications. And also the good thing towards the digital economy, I think it will help a lot, because it enhances a lot of efficiencies. So and also there's even in terms of the other sectors, the green economy, I think Rwanda is very strong, relatively stronger than a lot of countries in Africa when it comes to the green economy and to issues dealing with sustainability, which I think is a very good avenue and not fully explored, but there's a lot of potential in that area.
We are speaking to the CEO at the Capital Market Authority, Mr. Tsheole, here with us in the studios. Juliana, you have a burning question?
I have one final burning question. Well, Mr. CEO, foreign investments is very crucial for any emerging market, but often comes with risks of capital flight when global conditions change. How does Rwanda plan to attract and retain foreign investments in its capital markets?
Yeah, in terms of attraction, like I mentioned earlier on, apart from the normal outreach in terms of the building relationship with a number of custodial banks outside Rwanda, international custodial banks, we also plan to do some international roadshows. Which is what other markets are actually doing. We could have done London, New York last year, but I think we'll do either New York or London sometimes this year. But of course, also even in terms of presence to some of the international events, I think we will be much more visible in terms of doing that. And also, most interestingly, all the rules and regulations that we normally do, we normally take out to some of the big entities and foreign investors to just quality check them, to make sure that, like we are saying, we are positioning ourselves as a good international hub. Because when you do things according to international standards, people who want to come to a market as international investors find it easy, because the processes are the same, they're international. The standards are the same, they're international. Unlike where you localize a lot of requirements and a lot of things that are there. So, in terms of retaining and maybe resiliency, I mean, it speaks more to the efficiency of the capital market. We need to get more companies in the stock market. We need to have more activity in the capital market in terms of administration of funds, setting up of funds. Because when you set some of these funds, that's where money comes in, and that's where the administration comes in. And also, I think which is one thing that I think is actually done in the financial services sector, is the issue of skill.
And I wanted to touch on that because I've seen
Skill.
in my history of interacting with the capital market, I've seen Megisha for too long.
Yeah.
Right now, he should be CEO.
Yes.
I've seen my friend, what's his name at RSE?
Celestine.
Celestine for a long time.
Yeah.
So, in terms of skills,
Yeah.
do we have the right people in the pipeline, trained, who effectively can run the market, offer knowledge, advisory, and all of that?
No.
That was so
There you
fast.
go.
The institutions are not training such candidates.
Yeah, we I think the financial sector needs some level of special attention in terms of skills. I've also been trying to recruit at CMA. I went through round 1. I went through round 2. But there are some pockets of people you can get there, but for some reason, which is also a shock to me, people here sometimes don't apply for jobs.
Isaac hasn't applied for that job.
Wait a minute.
We should have been in that recruitment.
Yeah. So I think, but there's also a survey which was done. I mean, I'm not speaking this out of only my personal experiences, but also the survey that has been done in the financial sector, which clearly shows that there's some attention that is actually needed in terms of the financial sector. And I think is something that I think, as all of us, CMA, Capital Markets Authority, Kigali Finance, Rwanda Finance, RSE, and all the other commercial banks, I think that the skills are there, but capital markets, it's very small. So I think we need to, all of us, make a contribution in terms of what you need to do. But
Maybe offer some scholarships.
Yes, offer some scholarships, offer training programs,
Yeah.
and also offer an organized type of internship. Because right now, my feeling is, which is my feeling, RSE does their own
Silos.
internship, silos
Yeah.
type of.
Yeah.
So it doesn't help the economy. I
Yeah.
was actually speaking to somebody from ICPA yesterday to tell that, we probably maybe need to identify 100 students graduate from the university, and then under there's 100. We split them among financial institutions. Maybe 10 go to RSE, 5 goes to CMA, 5 goes to Rwanda Finance, 5 goes to maybe BK Capital or Arnet, and then we rotate them. After that, they rotate. The ones who are there, Rwanda Stock Exchange comes to us. The ones who are at us goes to Rwanda Finance, and then we just rotate them. We'll create critical skills mass, because right now what actually happens is that people just take interns, and they'll be just confined to some back office.
That's right.
In some of the entities, it doesn't really help anyone at all. It doesn't help anyone. And also, I was telling even this to Manifik, the university challenge also doesn't. It doesn't impact a lot of skills, because it's only about a month activity. We need something that can engage students for for a longer
longer
time,
time.
especially in Rwanda, because I believe a lot of this economy, the good thing, unlike a lot of economies, is in terms of tech services, IT services and tech, it's very advanced. It's actually too much
It is.
advanced. So I just told him we just need an app where
Yeah.
we can get people, which is what we introduced in Botswana. I mean, people compete. There's a national competition, or where people win money, of course, where they run a virtual portfolio on the listed stocks. So it's an app, you just access it in the phone. Every day you buy virtual stocks, and then you train yourself to do that. I think we need something like that here, and that is what we're looking into, maybe into the next year or the year after, unless we probably maybe we get a good sponsor for
That would
for
be
that.
very exciting.
Yes. Yes.
Great.
And we run and this thing, we ran it in schools. There's a national schools competition where every student just get in, download the app, log in, and then start. We are given maybe 5,000 or 500,000 Rwandan francs as virtual portfolio, and then you just run this virtual portfolio. At the end of the year, we just see who among all of them
Has performed.
is actually have performed, and then they win
That's a
the
good
prize.
initiative.
Excellent.
Yeah.
Listen, I want to hear of a success story. To some, the market is complicated.
Yeah.
To some, it is, if I put my money here,
Yeah.
can I get it out in 3 months? Richer. Okay? So some people went into
3
the capital.
months.
3 months.
You want to get richer.
I want. Can you please, CMA? Can you grow
My money
tea
faster.
and coffee? That takes 2 years. Can you grow olives? That take 50 years, but grow them in 3 months.
I want to get richer.
I want money now.
Because people want money.
But people want results, though.
People
It's
want
fair.
results.
Yeah.
They say, okay, you asking me to participate in the capital market.
Yes.
So will I put my money there and get my money? Because I could go buy land. After 3 weeks, I sell my land and get
What are the benefits
100,000.
beyond return?
Yeah.
Not only returns, but then the benefits beyond.
Yeah. The thing is, you can get your money, but you can also lose your money.
Uh-huh.
That is why it's called investment. It's not saving. Yeah, when you save, you put aside, and then you are sure to get your return. Here is investment. There's a probability that you make money. There's also a probability that you lose your money. And I always say, much as we want to bring people into the market, but we also need to tell them about the risks
Exactly.
associated with the market. And they need to know that when they come to the market, you can not only make money, but you can also lose money. And it needs to be loud and clear in terms of that. But I think the economy is doing quite well, or have been doing quite well, at about 9%. The listed entities have been doing quite well. The listed bonds, government bonds, and even some corporate bonds are offering very good returns, and hovering at about 10%. The money markets, or what you call the unit trust, it's RNet, and there are only 2 unit trusts here, which is very small for the size of this. The number is extremely too small. I mean, to have only 2 unit trusts.
Could it be part of the conditions to set up a unit trust?
Normally, I think it boils down to the systems and the entities and the governance around that. But I think there are a lot of opportunities that are existing, because even in some countries, people set up unit trust based on, they can be a dollar based, where people just buy dollarized unit trust. But I think that market is coming up also quite good for people who are who fear risk. The unit trusts are much more safer. They can invest maybe for 3 months, like you are saying. Pack your money, get 10% maybe for 3 months, and then just exist. But equities are generally for the long term.
Yeah.
I see you've answered the next question I want to ask. Partly you've answered it, where you're talking about the government to give way to private involvement. But critics do argue that African capital markets, including Rwanda's, they remain overly dependent on government bonds. And I think we sing this song on bonds every now and then, bond from BRD, bond from Beneri, rather than the private sector-driven equity markets. Is this a sign that businesses lack confidence in listing on the exchange? And if so, do you have anything you want to do about it to change it?
Yeah, I think, this stems from the issue that capital markets in Africa are developing, and therefore the government bond market act as an anchor or a benchmark to private issuances, and there are some countries that have issued bonds only to establish the yield, what you call the yield curve, and not because these countries wanted to borrow money. I remember back then in Botswana in 2003 when the first bond was issued by government. Government had enough reserves. The government didn't need to borrow. They were only establishing the yield curve, because the yield curve is used to price bonds. So the corporates look at the free yield, risk-free curve by government, and then they price. And therefore, I think it's an argument that stems from the fact that the government bond market actually anchors the private sector issuances, and also it acts as a benchmark for pricing of the private sector. And therefore, I think it's a stage of development of any market. But of course, I will also agree with you that there tend to be too much over reliance on the government bond market by most of the countries in Africa. But I think we have seen a lot of development in terms of the private sector issuances. And here what we really want to do is to try as much as possible to reach out to entities and talk to them in terms of their corporate structure, funding structure. Do you need equity? Do you need debt? And if you are not ready for equity, then go for debt. Which is what corporate finance is all about. You look at your needs, you look at your project, and you see what is the best thing to do. Go for debt first if you can, maybe build that company, and then after that the company have grown, you can then come in and sell off shares, pay off the debt, and still have some money for growth. So I think that is what actually happens.
We're coming to the end of our conversation with the CEO from Capital Market Authority. But before we even let you go, I want to do a comparative, situation, picking from your early submission. Botswana, about 2 million people in the country, 100,000 accounts in the market. Rwanda, 14 million people. We're talking about... you said 20,000 accounts, and I don't know how active these accounts are. What is the difference that you see? Is it the awareness, the information, the knowledge available in the market, and the confidence? What is it that we cannot even strike near half?
I think the awareness.
It's awareness.
Yeah, I think that I'll admit there have been lack of awareness. I mean, how many accounts did we have? Even for, our basic measures. When I got here in May, the CMA had about 300 followers, and on LinkedIn.
Social media.
For example, we are now looking at 5,000. Well,
that's growth.
Just an example. I think, I think it have to do with much more with the awareness, mainly, before we even get to the issue of the instruments. The awareness, I think, it's been very small, and that is why to grow the market, you can't do only one thing. You balance, you push public education on the other side, while on the other side you are also looking at pushing the instruments and the companies to list, so that both both move at the same time. But I'll say the awareness. I will ask you, maybe you have only been asking me questions, maybe. How many?
Fair.
How many?
It's time for you to
When
shoot
was
back.
this radio station established?
We're looking at this is 2015.
Okay, no, let's not go back there. In the last 5 years, how many times have CMA been here? In the last 5 years.
I don't
few
want to
times.
put my friends at the task of wanting to answer this question, but I think a few times.
Few times per year.
Very
Yeah.
a few times.
Yeah. Do you have
Four times.
according to yeah.
4 times?
4 times.
That's-
And I think that is normally around the university challenge, right?
Yeah, that's close to nothing. And then do you have unfortunately this is the radio station when I switch on my car always this is the radio station I've never ever had some business news in. Is there a business news segment?
Since CMA is
Absolutely.
here, they probably will be part of this business use.
Exactly my point. No, exactly. I mean, in most of the markets, I mean, in Botswana, how many radio stations do we have? We have about 4 or 5. And all of them, almost every hour or 2 hours, there's a business news section. But of course I know, and this is what I told Magnifique, that you need sponsors for this thing. I mean, people need markets. Markets exist because of news. That is why even on international market, the stock market, the television or the radio station is always is always there. And these are the things that I think we'll be working with you to try to do that, because even on the agenda. It's something that I think we could have done, a few months back, but we decided to do just some basic training of financial journalists.
Yes.
I mean, with due respect, I get a lot of questions here, and at sometimes I say, okay, no, I think we need to also train some business journalists.
Yes.
Business
Yeah,
reporter, yes.
business reporting, so that they carry the messaging correctly across the things. So you can see it's a concerted whole
It's an ecosystem.
ecosystem that we need to bear.
This is to close. There's a research that shows that babies tend to smile more than adults, with an average approximately 400 smiles per day for a baby. Now, women smile about 62 times in a day. And they said men smile only about 8 times in a day.
Yeah.
I don't know what the problem is, but I can imagine for a CEO like you, busy as you are, with a market to grow, when do you get a moment to smile?
Once a month.
That also needs to be improved. That indicator needs improving.
That sounds very scary. If you smile once a month,
But I think that research is right. It's very interesting. It's a very interesting research.
So do you...
Oh, by the way, I think these are some of the things
I think
that
you smile more
that I
than
like.
once a month. Do you? That was a joke. You don't smile once a month.
It's not a joke.
What is there to smile about? Headache after headache.
Yeah. So, but I think it's an interesting discovery.
So do you find moments off of your work to just loosen up and have a good time as a CEO?
He just told you he flies. Oh,
Oh yeah, I do. I do. I walk in the mornings normally, or just jog in the morning. But the train here to jog is tough. This one flat.
you go to the green.
I'm used to flatland.
Now you're here.
And
Yeah,
the
now-
timing is very tough, I can imagine.
But it's that's what I do. But I've also taken some, 1 or 2 weekends to Kisenyi,
Oh, good.
to Lake Mahazi, that side.
You've done the canopy walk yet? Canopy walk.
No, not yet.
Yeah, not
not yet. Not yet. But I'll do that.
We appreciate you for taking the time to come and speak to us on our Thought Leadership series. We've been speaking to the CEO at the Capital Market Authority, Mr. Tsheole. Do you have any final parting shots?
Well, I think just to say, I mean, we are looking forward to working together to develop the market.
Yeah.
That's all.
You are most welcome. Time now is 8 minutes after 9 o'clock. Let's have the news. Good morning.
From around the world, the